Good morning, everyone. How are we today? Quiet energy. Can I get a hello? Thank you, gentlemen in the crowd. It's always good to be back here. Today, we're obviously juggling some logistical issues. My co-founder, Cindy, will hopefully be here very shortly. But to talk to you a little bit about what we have in mind today, why we believe the most capital-efficient platform is going to be on Solana, and what that means for DeFi moving forward. So I guess to start, there's been a huge debate on where the best DeFi platform is going to be built. Is it going to be an L1? Is it going to be an app chain? Is it going to be its own ecosystem? I think for us, we hold this thesis that Drift Protocol, that the most successful derivatives DEX has to be built on an L1. And there's many reasons for why this is the case. We think that the app chain narrative is not going to work because they're never going to be as performant as a centralized exchange. Compare the most performant DeFi platform versus Binance, Bybit, or even OKX, and already there's a magnitude of difference. So why would you select a worse experience on a DeFi platform versus a centralized platform? It's not exactly decentralized, and furthermore, they suffer from a lack of composability, meaning they're unable to interact between other projects. If you are on your own app chain, you're almost on your own island. Everything has to be done on that alone. And I'll touch on this later. Beyond this, to get any asset onto an app chain requires a form of bridging. Again, consider the fact that you're an L2 or even an L3, you have to bridge assets from the base chain to your app chain. Whether that's moving USDC, any type of assets, there needs to be that movement. It's difficult because more often than not, there's going to be a wallet that's required, a bridge that's required, and beyond that, when you do move, the market for liquidity on those platforms is potentially quite limited. So again, a centralized point of failure in terms of both the wallet, the bridge, and finally, more often than not, worse UX given the thinner liquidity of that platform. So for a user using an app chain, the app chain has to consider a lot of things to onboard that user. It has to A, make the user feel comfortable around bridging over to the app chain, B, provide that liquidity that is native to the app chain, and then finally find the right partners to support that. For instance, Circle was not supported on Cosmos for many, many years, and recently they only just supported Sui. So if you're an app chain on Sui, it's going to take a lot of time to get that liquidity on that platform. So in future, we have this thesis that everything's going to be tokenized. And I'm going to let that sink in for a second. We're seeing parts of this already. Treasuries moving on-chain. Already, that is a significant lower cost of doing business when you're able to settle treasuries without the T+2 days, without the clearinghouse and all that's required in the traditional markets. So beyond that, we can take that a step further. Commodities being oil, gas, gold, real estate, property, commercial developments, and then beyond that, deep in assets such as helium, render for mobile networks. And why I talk about these things and why this is important is that in the future, there is going to be one centralized place for all these assets to be transacted, to be traded, to be moved, and to also just generate returns on. Imagine you are a helium mobile hotspot operator. You're receiving your rewards in the form of helium. As a result, you need to find a way to either hedge that, move that into fiat currency, or even find a place to hold it. And I guess this brings me to why we believe Solana is going to be the home for tokenization. Again, this conversation today is not a pitch on Solana, it's a pitch on Drift, but also it's important to respect why we have chosen Solana as that destination. Solana has obviously seen a fantastic amount of growth over the past year and a half, going from what was as low as 300 million assets under TVL to over 4.5 billion. And it's become a household for a lot of strong DeFi platforms. Vegito, Jupiter, Camino, all of which top $4 billion in TVL, each hosting more than 1 billion each. So walking through this, we think that this infrastructure has to operate in a composable manner, where if you are a user or if you're a participant in the network, you can enjoy the usage of restaking, you can use swaps, borrow land, as well as earn products. And all these three, for instance, refer to Jito, Camino, and Jupiter respectively. But beyond that, there needs to be, I think, a centralized marketplace and a centralized infrastructure for this to operate. So let me give you a quick example of why we think Drift falls into this. I talked a little bit about on-chain composability and what that refers to. The composability piece is really important in that you want everything to be done under one platform. It's always baffled me why you go to one platform for your borrow-led needs, you go to another platform to do your swaps, and you might go somewhere else to do your leverage trading. Why is it that this is not all under one roof? And it's very antithetical to what we believe, given the experiences with Binance, centralized platforms, where it is really all under one roof. There's no need to move collateral in and out. And I think Drift embodies that moment. And we call this the Binance moment for DeFi. On Drift already, we are the largest perpetuals DEX on Solana, where you can trade perps and trade derivatives. That's been our bread and butter for the past 3 years. But beyond that, we've also merged to become the second biggest borrow-led market in terms of earn. And then finally, we introduced the first capital-efficient betting market on Solana. Again, this is our response to Poly Market on Polygon. It allows users to essentially take a position on Trump, Kamala, and has even extended beyond political markets to talk about F1, Fed rate cuts, and even more recently, voting on an outcome of what a debate could look like. So for instance, celebrity debates between Iggy and Eric at Breakpoint is also going to be a prediction market that we can support. So this refers to our bet product. And if you're taking a bet, for instance, you can do that all under one roof. You can perhaps long spot, but then hedge that against a short Trump perp. Why this is really interesting is you can essentially hedge that position out if you believe that Trump is going to win. You have a thesis that Bitcoin will do very, very well. Well, perhaps you might want to hedge that out, or perhaps you want to arbitrage that against other prediction markets. But you can all do this on one platform. You can deposit your collateral, own spot BTC, that is used in a cross-collateral system. It then allows you to take a corresponding position on the betting market. So this all comes together very seamlessly. I want to now zoom out and talk a little bit about how this relates to the entire ecosystem. This is very much on-chain composability within just the Drift platform. But beyond that, when we think about off-chain composability, how does Drift interact with everything around us? When you're a new user joining any ecosystem, the first way you enter is you need to find a wallet. And that wallet better be a damn good experience. Otherwise, you're not going to try and use it. So you start off with a wallet, whether it's Phantom, TipLink, a low friction cost of onboarding. Use that to send money to a platform. The onboarded user is then able to do a lot of things. They can perhaps spin up a Helium hotspot. You're a mobile provider now, and you're earning yield in your Helium tokens. And you're doing work for that. But with that yield, what do? You want to swap that out? Fine, you go to Jupiter and you swap it to USDC. You want to hedge that. Very similar to corn markets back in the 1960s, you can essentially take a short position on derivatives, lock in that profit, and then continue earning those tokens. And then beyond that, you take the rewards. You can even deposit that into Drift. Put that as collateral and start taking positions on betting markets. The thesis here is that everything happens all under one platform. There should not be a segregation of what this all looks like. So moving beyond this, I want to talk a little bit about this decentralized financial infrastructure stack. As you can see, we've broken this down into consumer, primitives, and then collateral type. So I'll go bottom up. Collateral type refers to what I was describing earlier as stable assets, collateral assets, any asset that can be used on the platform. Historically, everybody here is probably familiar with PYUSD, USDC, but even more recently, we've seen the development of very clever investment instruments such as USDE, Athena, where you are earning yield based on a funding rate. To note, this is not a stable coin, this is an investment product, almost like an on-chain hedge fund. And you've seen similar representations in USDY, which is an investment in BlackRock's tokenized treasuries fund, and USDM, yet again another similar representation. All of these stable assets investment products should be able to use seamlessly as collateral across platforms. So why is it that on DeFi platforms you can only deposit USDC or just USDT? In reality, you should be able to deposit everything. Now going up the stack, we think about perpetuals, we think about options. These are very common financial instruments that have been around in the real world for many, many years. And it should be a no-brainer that there should be a thesis where you can trade anything with anything. And that's something that we embody. Going beyond that to the consumer level, your average consumer might not be a heavy trader. They're not trading millions of dollars of volume or putting on options positions. Heck, they don't even know what convexity is. So for those users, we want to wrap these products up in a very transparent and immutable way. Cast your mind back to 2021, 2022, where we had all these products be locked behind black boxes. We're talking about Voyager, Celsius, where you were promised a yield without really knowing what backed that. Again, on Drift, you can see this. You can create an aggregator product, you can create a vault product, and from that, you're able to figure out, well, this is where my assets are being held, this is what's being used with my assets, and as a result, this is how I'm generating any corresponding yield on it. And to talk through what this has looked like for us, we've enjoyed a fantastic growth trajectory over the past year and a half. There was a time where Solana was in a very difficult place. Across the entire ecosystem, there was less than 300 mil in TVL. Today, Drift alone holds 500 mil in TVL, $500 million. And it's really come a long way, and it really shows that this adoption, this growth, is being well received by people that are using the product. The cost of having all of this on L1 is truly powerful. But this isn't without challenge. And I think this might be a fantastic point for me to perhaps pause and welcome my co-founder, Cindy, onto the stage to talk through what the challenges might be.
Thank you so much for the intro on Drift. I think one of the key things and one thing that we're looking to announce today is a solution to the challenges of being an exchange on an L1. As we know, David's talked through fantastically a lot of the opportunities of being on an L1, where you have a major capital base to work with, huge ecosystem partners. However, the problem of latency and getting to centralized level speed is still a 10x improvement away. So how do we get around this without compromising the fact that we are on an L1 and we don't want to build our own app chain? And essentially, how do we solve the problem of being natively integrated on the L1 while still scaling forward? We have thought a long time about this solution, and people have asked us, is Drift ever going to build its own L2 given the scale of where things are at now? You guys are a DeFi ecosystem, and you're more than a single product. However, we wanted to build a novel solution that has never been seen before directly on the L1 itself, using an intent-based gaslit method to essentially scale the liquidity that users can get on the L1 itself. So you can buy and sell directly to market makers in a gasless way on the L1 itself, and this is how it works. So on Drift, you will essentially sign a message to confirm the transaction that you're entering, whether you want to go long 1 or 100 Bitcoin. And instead of going to the Solana network and paying the gas fee to essentially say that you're taking this trade, which creates another layer of abstraction from the transaction itself, you're going to this Swift server, intent-based server that's built on top of Drift, broadcast the intent straight to market makers. These market makers can confirm your transaction to fill or kill, and then place that on-chain after they've confirmed the price. This does two things. One is that it confirms the price that you're going to be entering at, so you never feel surprised by slippage again. And two, you get to fill in much larger orders because market makers are now filling it directly against you instead of competing with other MEV bots and other agents on the blockchain. So this is going to be launching very, very soon in beta. We're very excited to add this to our suite of liquidity tools to help traders get better price discovery on-chain.
And that takes us to the very end. I think we've managed to condense quite a lot into the 12 minutes. If anyone's interested to learn more, please come reach out to us. We'll be hanging around for a little bit longer. And again, appreciate everyone for listening and tuning in today. Thank you very much.